Good evening, TheoTrade. This is Corey Rosenblum, man. You're watching the Theo Nightly video for the 8th of July here in 2021, and we got some downside activity. Might it last for a session, or might it be longer than that? Nevertheless, we got our snapback pullback, or the rubber band pullback we've been discussing, trading, positioning, waiting patiently for. But is this the end? And just to look at the future, we look at the prior examples where we've had the market overextend. And just to quantify, we've had 1, 2, we'll count that as a third, fourth, fifth, sixth, seventh, 8, 9, 10, 11, almost about 12, 13 days. So basically out of about 13 sessions, 11 have been direct up days. And that's where we are. That's an extended run. That's an overextended, overbought market in the context of an ongoing uptrend. And we have seen similar quantifications like that, which is about the same number of up days. This is the S&P futures. Similar to here in February, very similar, actually much more impulsive off of November, and similar to October right there. But also we've seen comparisons to the current market into last year's and 2020. So that's what we're looking at here. Overextended, continued bull market, continued higher highs, higher lows. But markets don't go straight up, even if they trend. A trend tends to have a series of higher highs, higher lows. And if we put that model, we can draw trend lines or linear regression. We can use moving averages, but that's going to have a structure. Structure means building blocks that look something. That's a little odd, but like this: higher highs, higher lows, higher high, higher low, higher high, higher low, higher high. And the next move of the market, that's that higher high, is a higher low. And that's just swinging down. So that is the simplest way to convey what we're looking at. It remains an uptrend until it breaks lower. So essentially uptrend until proven otherwise. And that is, again, what we call the structure of the market. That being said, that's your S&P. We are playing off the weekly expected move. And I just put that chart level there. It's roughly about 4293. Don has precise numbers and levels. We'll just see the auto expected move chart. And to get these levels to show up on your intraday or lower frame charts or lower than daily chart, you would just need to draw a price level or a trend line. And I have mine as hash marks or little spaces. And once you draw it on the auto expected move chart, you can download this, of course, in the TheoTrade shared member studies page. You'll be able to access these dots or levels or hash marks on your own charts. And that's based on the levels from auto expected. Now that is the SPX. We'll take a look at the Nasdaq just while we're on the topic. It did not quite achieve the lower bound of the auto expected move. The Dow mini futures, they were under, and again, that's the futures market, little different levels. Don't trust those as much as we trust other markets, but the Russell or the, when I say other markets, we just refer to the IWM or those ETFs. So speaking of the IWM, it is taking a structure that is not quite as uptrending as the other indices. It has what we call low to high, high to low. That's a swing. Low to high, high to low, low, high, low, right? Low to high, that's one singular swing. Back to the low, back to the high. And we're finding ourselves at the lower bound of that broader trend line structure. Again, this is structure and this frames out trades. And I'm only looking for the short-term plays. I don't look too far beyond a week or maybe a week and a half in advance. That's very short-term. And I am more intraday than doing other techniques. But swing trades play into this model as well. So the next swing is either going to be a similar type of push up as the examples 1, 2, 3, 4 examples here, or this might be the time that it breaks. And we just assign a probability of X being a rally, Y being a breakdown and decline. And the broader structure does argue a little bit higher probability for that rally. But then again, this is the IWM. It has a different and distinct structure from other markets, which include the spiders or the SPY. That structure is way more impulsive or trending than the IWM. So we'll keep that in mind. Looking beneath the market, we see crude, or beneath the equity market, crude oil which is a commodity that is sensitive to the economic expansion, is taking a similar type of uptrend structure to the equity market or the S&P. It does make sense, and that was a correct call, correct play, and correct trades to pull back or snap back or trade in the direction of a short-term bear pullback. Again, markets do not go straight up. It may feel that way, but they don't go straight up. They actually swing back, and that can set up buy opportunities. In gold, we had a stellar gap to the downside, and it is not trending. So gold is having, if anything, more of a declining type of trend, but it's too uncharacteristic, but unstructured to be classified as we might other markets. On the other hand, the bond market is having a structural reversal, and this is TLT. I prefer to use TLT. This is a downtrend with lower lows and lower highs that accelerated into about April. That structure, think of it like a building, a structure, the structural downtrend was broken. And we then had a movement in the bond market of higher highs, higher lows, higher highs, higher lows, and that has been the projection. And we have seen that occur. So the bond market's catching a bid, the bond market's rallying, and on the flip side of the bond market catching a bid, we can discuss TNX, and that's the Treasury yield. That's catching the opposite of a bid. And again, that's that is directly inverse. The bond prices to the bond yields. They saw an acceleration in the better part of 2021, but that uptrend, the series of higher highs, higher lows, was broken in April. And since then, the yield has been in a downtrend. We'll just clear out our drawing just to note that progression. So I do want to highlight one quick thing, if I might, and bear with me as I do this. The bond market, we'll pull up something quickly so I can get a comparison chart. What I want to show is not what we're looking at, but a comparison. So comparison is going to be just a simple tool to look at the TNX. So beneath the market, we have TNX. That is our 10-year Treasury yield. And bear with me again as I plot these on the same time frame on a daily chart. So what do we have? What have we here? We have the S&P, which is the equity market, is positively correlated to Treasury yields. That again is the 10-year Treasury yield, U.S. government yield. Again, higher highs, higher lows. The uptrend persists in the stock market. The uptrend persists in the yield of the treasuries. But note where things have taken a different turn. The equity market finds itself now at or near all-time highs, but the yield peaked right here. And that again is April. We have seen the yield trend to the downside since then, which means there is a split in the market. This is something to watch very closely in the weeks ahead. To the extent the yields go down, will they pull the equity market with it? And that is something to, again, as we push forward through July, keep a close eye on the equity market or the SPX, stock market ultimately, with the yield. And for fun, that is, of course, inversely correlated to the TLT, which is the notes. So that's just a tradable ETF. Stocks go up, bonds go down. That's a good relationship to be, we call it inverse relationship. That worked well until, again, the trend was busted in April. So now bond prices are going up. That is bond prices, but yet so is the equity market. You think the equity market would trade down, but it's not. That's something to watch as we push forward. Finally, we do make a note of the stocks, just for quick reference, of strong stocks getting stronger in our scan. So despite the pullback, the expected pullback, the logical pullback, the planned pullback, the profitable pullback, 22 stocks in the S&P 500 made new, in some cases all-time highs, otherwise 52-week highs. Just to make a note of some of them, we'll go back to our normal time frame. Amazon continued the breakout. That's a reversal, so that strengthened the Nasdaq into the afternoon session. Costco is a strong stock getting stronger, and it remains making new highs, but it can't pull the market up. And we can see others, including Target, which continued that upswing. and other stocks. I'll put them back in the chat so you can freeze the screen and take a look at those or scan on your own. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for July 8th, 2021.